Hello and welcome to the social trading webinar with me, David Jones, and in conjunction with Aondo Markets. If you're watching the recorded version of this, it was held live on Tuesday the 28th of March at 7:30 in the evening. So I do a couple of social trading webinars a month with Aondo, and then every Wednesday lunchtime at 12:30, I do a market outlook webinar where we look at what's going on in the markets. There's a lot going on this week with that big plunge in the Dow and the S&P, the US markets last week. They've really recovered strongly this week. We've got the S&P back above last Thursday's highs. So that's been an interesting market this week. Also, of course, the pound with the Article 50 being invoked tomorrow. It should be for a volatile day. But every Wednesday I do that, like the market outlook one with Aondo. But tonight it's social trading, which is all about copying other traders and having their trades mimicked on their account. So tonight it'll be pretty hands-on, going through with a real account, some real examples. To find out more, you can visit my website. I've been blogging about a real social trading account for a couple of months now. So if you go to tradeafter.com, you'll see details there. I'll just put the risk warning up. The idea behind social trading is pretty straightforward, really. We all know that trying to make money trading is hard, and social trading sort of puts you in the position of being a manager of top traders rather than trying to be a top trader yourself. So I do think it's an interesting approach. I've been aware of it for a few years. I've been doing it for the past 12 months or so, and I think it's quite an interesting add-on to your own trading if you're trading yourself. Or actually, if you fancy having some exposure to markets but don't have the time to watch markets, then again, I think it's another interesting way of looking at things. And the idea behind it is straightforward enough. You find a group of traders, let's say you find 5 traders with solid track records. You have a real account set up, you copy those traders, and then every trade that they do is carried out on your account and hopefully crunches out a profit. It's pretty straightforward. But to get started, let's take a look at the platform and have a look at how well some of these big traders have been doing recently. So we're on Aondo's website here, so hopefully you can see that. Yes, you should be able to see that on your screens. So I think even if you don't have an account, you can see this information. So this is the rankings list. So how it works is if you have an account with Aondo, if you want to, you can make your track record publicly available. So it means that people can see information like this. So what I've done here, I've sorted traders by their P&L, their profit or loss over the last 12 months. So who's made the most percentage return. So this is a bunch of traders who make their trades publicly available and make themselves available to be followed. That's how it works. So the top performer, for example, over the last 12 months, the top performer is this one here, Votan. So Votan, just to go through the numbers pretty quickly, 86% return over the last 12 months, which is clearly an impressive number. Maximum drawdown, this is as important, if not more important, than how much the trader has actually made. But this is how much of their profit was given back along the way pursuing bigger returns. Because of course it's all well and good, doubling your money in a year, but if along the way you ended up giving back 95% of your money before you went on to double it, it's a bit of a scary ride. So in an ideal world, what we're looking for are traders with solid returns, but not massive drawdowns either. So the drawdown 11 here, along the way, Votan has given up 18% of profits, almost, in pursuit of more profits. That's, I think, a pretty sensible number. Let's scroll down and see if there are any really horrendous drawdowns here. So there's nothing too bad. There's nothing over 20% in our top performers. Let's change this to the last month. I bet we'll get some horrible drawdowns there. Here we go. Here's an example. So over the last month, Lashy has turned in a return just over 13%. It's a fantastic return over a month, but ended up giving back nearly 35% of the account along the way. So that's a level of volatility that personally I don't want. If I'm following people, I like the idea of steady profits, but I don't want to see massive swings in the P&L along the way. So that's our top performer here, the drawdown. Seems a good ratio. What I also do to filter it out, I restrict it to RMT. So what RMT is, real money traders. So if these people are trading with Aondo, if they're trading on a demo account, so they're sitting there clicking around with play money, they can make their track record available to be viewed as well doing that. But my view is, well, if I'm going to copy people with my own real money, then I'd like them to be trading with their own real money too. But if I flip that off, we'll now see everybody. So there's 1,100 traders available to be followed. The best performer over the last 12 months is this one, Peter Lloyd 5757, who's turned in a whopping 142% return over the last 12 months, which is fantastic, obviously. Drawdown of 25%, but for me, it's not one that would normally pop up on my radar, because Peter Lloyd 5757 is not trading with real money. You know, the first real money trader is down here, and it's Votan, number 6. But if you want to, if you want to broaden the scope of people you can follow, I mean, this one looks quite interesting. The P&L chart here is a really nice, smooth chart. I wonder why this one isn't trading with real money. But what I do, if I click on RMT, I just see those who are trading with real money. And the next bit's the important one as well for me, the chart. My background is technical analysis when it comes to sort of analyzing markets. So I want to see a nice, smooth P&L chart, and these aren't too bad. All of these in the top 10 aren't too bad. If we flip this over to the last month, let's have a look at some of the P&L charts here. We do see, so this one here we looked at before, made 12% return, but look at the chart, heading completely the wrong way, and some fairly volatile charts in there. So for me, if they've got a nice long track record, good positive returns, and also a nice smooth P&L, then it's a trader who appeals to me in terms of following. I'll just flip back onto the presentation bit for a second, just to go through some possible filters, because there's other stuff you can set up, and it's completely up to you. So for me, real money traders is a big one. If I'm going to follow them with my hard-earned cash, then I want them to be trading with their own cash. A smooth P&L, that's down to the chart. So I don't want to see massive levels of volatility. This healthy P&L drawdown ratio, it's all well and good making 150% return, but if you lose most of it along the way before you have that massive winner, it's not really a strategy that I want to expose my own money to. Low volatility, and again, that's coupled, I think, with the P&L to the drawdown ratio, and also the shape of the chart, the shape of their historical profit and loss chart. And there's a detailed search that lets you refine all this sort of stuff. So let's flip back and look at the league tables for the traders. So there we go. So there's our top 10 over the last year, and you can see, I think again, you've got to have sensible expectations about what sort of returns can be achieved. I think plenty of people start trading thinking they're going to double their money and more every year, but if you've ever done any trading, the reality that is not actually quite like that. If you can sit there in the low interest rate environment that we're in at the moment, if you can sit there and crunch out a steady quarterly return, of just a few percent, you're ahead of the game. And I think you can see this here. If we jump back down to the 10th best performer over the last 12 months, made 28%, so just over a couple of percent a month. Now, if we could sit there and follow somebody who was making 2% a month in, month out, I'd be very happy with that sort of return as a relatively low maintenance approach to the market. So I think it's important to have realistic expectations, about what can be achieved. But to find out a bit more, let's go back to our number 1 performer, Votan. So let's click on this person's name. Okay, here we go. So if we click on the name, we get a lot more detail about what they've done, what they've traded, and that sort of thing. And actually, this one's the best performer over a year, but has only been trading since November. So actually, that 86% return has been achieved in what's that? About 6 months. It looks like less than 6 months, doesn't it? So this is when this person started trading, and it's interesting because I've been running these webinars for a good sort of 6 to 8 months now, and plenty of previous top traders have really suffered since November, since we had the Trump move, where stock markets fell off a cliff overnight on the US election results, but then since then, up until last week, went up like a rocket, and plenty of traders have been wrong-footed. It's interesting that this one has had a great performance since November, so he or she has outperformed plenty of other traders. So that's the P&L since they've been trading. If we go down a bit, we can see a bit more information there about trades. And again, I think there's a word of caution here, or a note of caution. This person has only been real money trading since March 2017, so since this month. So even though they qualify now in my filter as a real money trader, actually the bulk of that track record has been built up on a demo account. So that, again, that might give you pause for thought and tempted to maybe have a look at some other traders, but there's some data. This always makes me a bit nervous as well. Nearly 94% of trades have been winners. That sort of degree of correctness is unsustainable. And I just now and again, if I see someone who's performed like that, it tends to make me maybe a little bit worried that they have a problem taking their losses. I'd much rather see somebody with a long track record who's right 60% of the time. So that's maybe a note of caution there for this one. Let's go down to the P&L, how it's being achieved. Now again here, I'm really not doing a good job on this trader, because I think even though he's the headline best performer, there are a few concerns about this one. But look at this first of all, November. Performance in November, 49% return in November. Now, to make a return of that sort of level, clearly the trader has to be taking on fairly ridiculous levels of risk. So for me, if someone can sit there and crunch out, again, a couple of percent a month profit, 5% a quarter, I feel much more comfortable following a trader like that. Since then, it's been a bit more sensible, I suppose. 2.6% in December, 5.5% Jan, 9% in Feb, and 5% so far for this month. So a bit more realistic levels of return. Still very good levels of return, but this one's numbers definitely skewed by that November performance, that increase of the account by almost a half during November. Then as we scroll down, we can see a bit more information, what sort of stuff they trade. So 35, 21 was that, 56, so 86% of trades on the DAX, the German index, or the Wall Street index, the Dow. Okay, so again, someone who's sort of focusing on a couple of markets. And you do tend to see that with the top traders. They're only trading maybe 1 to 3 markets. They're not trading a whole mix of different markets. Then a bit more information on risk, etc., down there at the bottom. So that's a bit on Votan. So headline figure is fantastic, but digging down a bit makes me think, well, do I really want to be following this trader? Quite possibly not. So let's take a look and see who else we've got. So we're going to go over the last year again. Let's see. I think I'm already following DAX Call 3. Jane, Ekel. Let's have a look at that one. Let's have a look at this one here. So number six on the list. Oh, it is number 8. Sorry. There we go. Ekel. Click on that. So has suffered a bit over the last couple of months. But going back over the last year has turned in around about a 28%, 32% return. There's the P&L broken down month by month, so the odd losing month in there, which I think is encouraging because we can't make money every month. Tough year so far, 40% up last year, down 4.6% so far this year. But let's say you took the view, well, they're just having a little bit of a dip at the moment, and they're going to come back. So one thing you might want to do is think, well, I'm going to follow this trader. And when you follow a trader, if we let's click on follow here. Click on follow. The trader you selected has a risk score of 10. Are you sure you want to follow this trader? Okay, this is quite a high risk trader. Let's click OK anyway. Let's spice it up and click OK. So what it means is ACAL, this one here, has just been added into my portfolio. So I'm not actually following this person's trades yet. But this person's been added in with 4 other traders who I've put in there already. Okay, so this is a group of traders who I want to follow. So let's talk about this idea of following traders. in the most simplistic form, what it means is if they do a trade, if they buy the Dow with a 60-point stop loss, the same trade gets done on my account. So every trade they do will automatically be carried out on my account. So what we're trying to do ideally is pick, from my point of view, I'm trying to pick a team of 5 traders who I'm confident-ish will make money over the next sort of 3, 4, 5, 6 months. But what I can do, there's an extra level of risk control I can put in. If I was only following one trader, so let's pretend I'm just following this one here, Edelmetall, and these other 4 weren't in my portfolio. If Edelmetall does a trade where he or she risks losing 1% of their account on a trade, the same trade will be done on my account in the same size. So if I've got £1,000 in my account and they do a trade risking 1% of their account according to the stop loss, then the trade will be done on my account risking 1% of my £1,000. So in that case, £10. So hopefully that makes sense. You can set the level of risk you're comfortable with. When you have 5 different traders in there, the risk is automatically adjusted. So actually your risk for each trader gets cut down to 1/5 because I'm following 4 of the traders. So if Edelmetall does a trade where Edelmetall risks losing 1%, on my account the default position will be, with 4 other traders in there, that I'm risk losing 1/5 of 1%. And I quite like that because it means you can dip your toe into this world of copy trading without taking on massive levels of risk. But you can adjust that risk if you want to. So let's go to Edelmetall and click on settings up here. Let's click on here. So what we can do, if I have it dialed down where it defaults to, which is 1 time, so what that means is if this was the only person in my account, I mimic their size exactly. So if they risk a fifth, if they risk 1%, I risk 1%. But if I'm following, as I am here, 4 other traders, my effective risk factor is 0.2. And I think this explains it better than I can. If you follow several traders, then your risk is distributed evenly amongst all of the traders. With 5 traders in your portfolio, you then follow every trader with 1/5. So at the moment, if Edelmetall does a trade where the trader risks losing 1%, I will risk losing 1/5 of 1% because I got 4 other traders. If I want to mimic them on the same percentage risk, I just need to bump the trader up to 5 times risk. Okay, so that way, with 4 other traders in my portfolio, with Edelmetall, if that person risks losing 1%, I risk losing 1% as well. So we click on confirm settings, that's done. Now the one I added, Akel, he had a high risk profile. So what I could do, at the moment I'm only following 1/5 of his size, his or her size, I can knock that down even more. So I'm following 1/10 of the size they trade. So if I quite like the idea of following a trader, but I'm worried a little bit about the sort of volatility it might mean for my account, I can really dial that risk down. So let's do that. Let's knock that risk back. Okay. And then what it gives me below, so I've got these traders I'm going to follow automatically. It gives me an idealized version of what the P&L might look like if I'd followed them over the last 12 months. If I went back, if I could go back a year and follow these traders, then my account would have turned in a return of 90%. So I'd have seen a 90% return. Now, of course, unfortunately, in the real world, there is no TARDIS trading. We can't go back and follow these people from a year ago. But it's a way of giving you an idea, an idealized world, how it worked. So once that's all done, we're almost ready to go. So I've got a couple of accounts. I've got this account I use for these webinars. It's got about, I think, about £420 in. So I've got to follow these traders. Click on execute on live account. There's another warning. Because these traders are active, clearly they'll have trades open and running. So what it says to me, do you want to open up the trades that they've got? Now, if Edelmetall did a trade on the Dow yesterday, the DAX yesterday, when it was 100 points lower, that trade will be executed on my account, but it will be executed on my account at whatever the prevailing price is now. so I don't get in, unfortunately, at the price they might have got it yesterday. So all the time I would choose not to follow their existing trades. I want to follow any new trades they do. So if I start following them and they do a trade in the next 10 minutes, then that trade will be followed. So if I click execute portfolio, that's it, it's done. So now there's my account with 432 quid in. There's no P&L, there's no profit or loss because nobody's done a trade yet, but I'm following those 5 traders. So now I just sit and wait for them to do a trade, and that will be done automatically on my account. You don't need to manually intervene and click buy or sell yourself. It's something that happens automatically in the background. The other level of risk control I can do. So I think the minimum to open an account to follow people with now is £1,000 with Aondo. But what I can do is set another level of risk control on my account balance, and that's this thing here, your loss protection. So if I click on there, so what this does, it really is a stop loss on your overall trading account. So you can say, well, if the balance of my account falls to, let's say, £310, close out any open trades and stop following people. Okay, so even though I've got £432 in the account, I don't need to risk all of that money. I can have this financial stop loss on the balance of my account. So if I click on save, there we go, that's done. So no one's traded yet, there's still no P&L, but there's my sort of stop loss on my trading account. And that's it. It's really as straightforward as that. Here's some old closed positions, I think, from the last time I did this webinar a couple of weeks ago. So I closed the positions and stopped following traders before I did the webinar, just to show how to set it all up. And you can see the size of the trades. They're pretty tiny, you know, because I've got the risk dialed right down. We're not talking enormous levels of risk here and massive trades, you know, so you really can set it up and structure it to a level of risk that you're happy with. And once you've set up an account with Aondo, you also get a demo account to play around with for 3 weeks and then sort of follow people and see how it all works. And that's how I started. I've worked in the spread betting business since 2005 and traded for myself since about 97. So it was sort of a bit of a new approach for me, following people and seeing these trades going through on your account automatically. So I played around with the demo for the first couple of weeks just to get used to it. And in those first 3 weeks, I saw a return of something like 15% on the account, but with massive levels of volatility. And I think this is the problem. If you follow some of the higher risk traders, you can get the returns, but you also get massive swings. So what I tend to do now is follow traders with a more conservative, longer track record and have a relatively low level of volatility. So that's it. It's set up and running. Once you do all this, I mean, I check my account maybe a couple of times a week. You know, I'm not going to boot a trader off after 2 or 3 bad days, you know, because I'm trying to take a medium to longer term view of this. And once you've got the account set up, you can just log on, click on my account, and you see what's going on, if anything, and there's nothing going on at the moment because no one's done a trade. There's my account balance, there's my P&L. I can jump into the portfolio if I want to swap around the traders, but I tend to only do that once every month. I'll go back and look at the rankings and see how people are doing. I'll normally give a trader a couple of months to prove himself, and if it doesn't work out, then chop the trader out and get somebody else in. But if you logged on one day and you thought, well, the markets have gone a little bit crazy, the traders aren't really coping with this level of volatility, what you can do is click on Stop Execution Now, and your account will stop following any new trades, and any open trades that you've got running will be closed out automatically. So it's a really straightforward thing to manage. I think it's important to understand, you know, it's not a license to print money. Like any form of trading, there's a level of risk. But I think if you've ever done any trading yourself, you know, you'll know that most people lose money. That's the reality of trading, you know. So what we're doing here is trying to pick hopefully a team of winning traders, have their trades carried out on our account at a level of risk that we're comfortable with, that hopefully turns in, a steady quarter-on-quarter profit. And that's really it. It's no more, I think, difficult to understand than that. Clearly, picking winning traders is where the skill comes in. But I think that, again, that's something, there are plenty of tools there to try and find traders with good, solid track records. Like I say, I've been blogging about a live account with real money. I opened another account to make sort of public probably a couple of months ago now. I put £2,000 in, and I think after a month it was up a couple of percent. It was up maybe 45, 50 quid. But if you can read about sort of progress there on my website, www.tradeafter.com. If you have any questions after watching this, just drop me an email. My email address is david@tradeafter.com. You can follow me on Twitter, and I'm on Twitter at Jones the Markets. But I think it's a really interesting angle to trading, as a way of potentially, I think, smoothing out some of the bumps of trading your own account, setting a level of risk that you're comfortable with, and trying to build a team of sort of interesting, low volatility, hopefully consistently profitable traders to follow. And that's it. We'll wrap things up there. There'll be a recording of this available a bit later on if you want to go through anything else again. Like I say, every Wednesday lunchtime, I do the Market Outlook webinar with Ayondo, where we take a look at what markets might be interesting to trade from sort of a self-directed point of view in the days and the weeks ahead. But for now, for the social trading webinar, we'll wrap things up. Thanks for coming along. And like I say, if you want to find out more, have a look at my website, have a look at the Ayondo website, and if you open an account, you can play around with a demo to get a feel for how it all works. Enjoy the rest of your evening. I'll just wrap things up there.